problem begins when the yield curve is steepening again. So we get an inverted yield curve, we stay inverted, coming up again, then we have the top of the market, and when the yield curve is steepening again, that is where all the hell breaks loose. So then we have a recession. Inverted.
That's a good observation.
Steepening, recession. And we had a quite quick one here. And I remember that John Murphy also was shouting on some YouTube videos, the yield curve is inverted, the yield curve is inverted, even if it was just really small, but also here, quick inversion. And then we had the Corona crash. And if you look on the big screen, we don't have data beyond 1989, but till 1989, this is the steepest inverting of the yield curve what we saw. And like I say, my expectation is that this is still not the recession what we are expecting. It will get ugly when we get from the yield curve up. And then also what you see is the employment market. So jobs, the job market, that is also something what is rising then. I mean, let me check unemployment rate. Unemployment rate here. What we also saw in the last recessions is that that the yield curve is steepening, and then the market is coming down, the unemployment rate is rising. We are getting inverted, top of the market, and that moment where the unemployment rate is rising, we are actually in the recession mode. And the steepest rise of the unemployment was here in Corona, but same shit, inverted yield curve, market is coming down, rising of the unemployment. And if I see that, then I would say, okay, guys, fasten your seatbelts, it's going down. But I don't see it right now. So this is the simplest way to look at the market on the macro perspective to see if we are in a recession. These are, of course, just hints. If we just look at these last years, this is quite a good indicator to see where we are in the market. And so that's why I say I don't share this opinion with a lot of people, but we are more or less in a correction. So it is quite bearish. Maybe we can also call it a bear market. And we had a GDP 2 quarters negative, I think, here at the beginning of the year. But when you look at if you look at the price chart, this is quite, on the big picture, a quite bull market. And this correction, okay, it is hard. It is over a year, but the market is resilient. And you see, I mean, we had it in the past that we also can have several years. I mean, we can have something more or less like a sideways move. And people who were invested in 2000 at the top of the market had to wait 7 years till they were break even. Then they had a cry moment again and had to wait 4 more years, 4 or 5, till they get break even again. Could this happen again? Maybe.